Hey, what's up everybody? Today we have another subscriber request and we're going to be taking a look at the company Mastercard, ticker symbol MA. If you have any companies you want me to review, make sure you leave them down in the comments section. As usual, we're going to dive into Mastercard's financials to see if the company is undervalued, overvalued, or fairly valued, ultimately to determine if the company is a buy. Also, you know we have to check out the portfolio because the market is getting slaughtered, so stay tuned for that. But first, let's go ahead and dive into the company Mastercard. So, Mastercard is a technology company in the global payments industry that connects customers, financial institutions, merchants, governments, businesses, and other organizations worldwide, enabling them to use electronic forms of payments instead of cash or checks. I'm pretty sure we all know Mastercard, so we're not going to go too deep here. When you swipe your card at a store or pay for something online with your credit card, Mastercard gets a small percentage of that transaction, as long as your credit card is a Mastercard, of course. Now, as of 2020, when this data here was pulled, Mastercard had about 23% of all purchase volume worldwide. Visa dominates here with 54%. However, Mastercard is gaining ground each year little by little. If you want to know more about the company, make sure you dig through those 10Ks, which are the annual reports, and the 10Qs, which are the quarterly reports. Now, before we dive into Mastercard's financials, let's see what the stock has been doing. So, as of the recording of this video, the stock is trading at $304 per share. Over the past year, Mastercard is down 12%. For comparison, the S&P 500 is down 13%. So Mastercard is trading pretty much in line with the market over the past year. They've had a 52-week high of $399 per share and a 52-week low of $281 per share. Currently, the company has a market cap of $293 billion, making them the 24th largest company in the world. Now, over the past 5 years, the company is up 111%. The S&P 500 is up only 48% over that time frame, so Mastercard is way outperforming the market over the last 5 years. If you saw my Visa breakdown, you'll notice that just like Visa, most of that growth came between 2017 and 2020. The stock has been flat for the past 2 years. That makes me even more curious about the current valuation. Let's dive into the company's key financials to see how they've been performing over the past 5 years. So as most of you already know, the key financials I look at are revenue, gross profit, net income, cash versus debt, and free cash flow. Starting off, let's check out Mastercard's revenue growth. In 2017, they brought in $12.4 billion, and last year brought in $18.8 billion. That's an average annual growth rate of about 10% per year, which is decent. Now, as far as 2022, they're on pace to grow revenue 22%, so Mastercard is looking good in this department. Moving on to gross profit, out of the $18.8 billion of revenue brought in last year, $14.3 billion or 76% hit the bottom line, which is extremely good. Next, let's take a look at Mastercard's net income to see if the company is profitable. So for those that don't know, net income is gross profit minus operating expenses and also taxes. In 2017, Mastercard brought in $3.9 billion and last year brought in $8.6 billion. That's an average annual growth rate of about 24% per year, which is solid. I looked at their net income from this year, and they're on pace to grow net income 15% here in 2022. Next, let's take a look at Mastercard's cash and debt levels. So Mastercard has $7.9 billion in cash and in short-term investments they can easily liquidate. They do have $14.9 billion in debt, but less than $1 billion of that debt is due in the next 12 months, so they're all good. On top of that, they're bringing in tons of free cash flow, so this debt is nothing to be concerned about. Speaking of free cash flow, let's take a look at Mastercard's. So to my new subscribers, free cash flow is all the money left over after expenses, taxes, and everything else that can be used to pay down debt, reinvest in the company, pay dividends, buy back stock, or anything else to benefit shareholders. In 2017, Mastercard brought in $5.3 billion of free cash flow, and last year brought in $9 billion. When you tally up the numbers over the past 5 years, that's a 5-year free cash flow average of $6.9 billion with an average annual growth rate of 13.7% per year, which is decent, but nothing spectacular at all. Let's use these numbers to get a quick valuation of the company using their price to free cash flow ratio. You get this ratio by taking the market cap, which is $293 billion, and dividing it by the 5-year average free cash flow, which is $6.9 billion, and you get a price to free cash flow ratio of about 42. A good price to free cash flow ratio for a non-growth company is anywhere between 15 and 20. Anything under 15 can be looked at as undervalued, and anything over 20 can be looked at as overvalued. And Mastercard is sitting at 42, so they're definitely overvalued from a price to free cash flow perspective. But now check this out. This isn't their current price to free cash flow ratio. I got this one using their 5-year average free cash flow, which I do just to give myself a margin of safety. Their current price to free cash flow ratio is 32, which isn't as high as their 5-year average, but still high for a non-growth company. Even so, when you look at this chart, 32 is lower than where they've typically traded at over the past 5 years, so that's definitely something you have to consider. As far as their price to earnings ratio, it's currently sitting at 30, which again is lower than what they've typically traded at over the past 5 years. So, do I think Mastercard is a buy at its current price of $304 per share? No, not quite. This is another really good company, however, the stock is just a little overpriced. To recap, as far as their 5-year averages, they're growing revenue at an average of 10% per year, net income at an average of 24%, and free cash flow at an average of 13% per year. Their current price to free cash flow ratio is 32, and their current price to earnings ratio is 30. This is a company that I would love to add to the portfolio, but I personally wouldn't jump in unless it dropped to around $240 per share. And that's mainly because I already own Visa. But at around $240 per share, I don't think I could pass up Mastercard and would have just to own both companies at that point. So what about you? What are your thoughts on Mastercard? Is this a company you would invest in? And if so, at what price? But now let's move right along and check out the portfolio. So as you can see, the portfolio is down 20%. The markets are still all over the place and there are still deals everywhere. As you've seen from my past stock market videos this year, I'm still dollar cost averaging into many of the stocks in the portfolio as the market continues to fall. This week, I added some Meta at $140 per share and some AMD at $65 per share. If you're curious on why I'm buying these companies, make sure you check out my reviews on each of them. If you're getting value from these videos, let me know by hitting that like button. I'll see you in the next video. Have a good one.